I want to talk about silver. This is something that concerns quite a lot of people. Things are interesting because China has been controlling this market for a very, very long time. I mean, I go back to when I was speaking in New York, it must have been about almost 15 years ago. There were a number of silver miners at this conference, obviously trying to raise capital, and they had stands. And in my spare time, I went round all of them and I asked the same question. How do you turn your silver or silver doré into cash to pay your running expenses? And the answer was pretty much always the same. Basically, what happened is that the man from Glencore would come along and assess the silver content of the doré. On his assessment, that would allow a payment to come from a major bank who I would think was operating with Glencore, such as JP Morgan, perhaps, and they would get paid immediately. Now, at that point, arrangements for the shipping of the doré to the refiner were made. So who is the refiner? I asked them, where did it go? And they said, well, we don't know. We think probably China. Now, at that time, and I think this is probably still true, China was the major refiner of imported silver doré. So what I could see is that you had this sort of triangle working, basically where China controlled the price. Look at it this way. China ends up with a doré. Let's say JP Morgan are in the middle of this deal and the payment is arranged through JP Morgan. Then there is a silver position, if you like, to hedge, which is done or managed by JP Morgan in the markets. And I would think that JP Morgan were given quite a lot of discretion to do that. The whole point about it was that as this doré came onto the market, it was the means by which the silver price was suppressed. This is the key thing to understand. I remember at the time also there was the head of the commodities division. I mean, there were all sorts of rumors that JP Morgan were suppressing the silver price and they were running a huge, great position. The head of the commodities division at that time was a lady called Blythe Masters, specifically went onto a television broadcast, and I think it was CNN or someone like that, and said they do not take principal positions. They will take positions on behalf of clients, or they will hedge on behalf of clients. Now, Blythe Masters was a very, very shrewd lady, very successful, and not the sort of person who would be stupid enough to lie on camera. So we can take what she said as being true. So the net discovery that I made from that conference in New York was how China was behind the suppression of the silver price. And this continued for a long time, keeping the silver price down below $50 pretty much until, guess what, about September last year. Now, what happened in September last year is actually crucial to understanding the future for silver from here. In September last year, President Trump threatened China with tariffs. The reasons, 100% tariffs at one stage. The reasons are not important. The response from China, however, was to put severe restrictions on her rare earth exports, which was designed to put the squeeze on President Trump, and he immediately backed down. What we didn't know at the time was that there was also a policy change with regard to silver. At that stage, it transpires that even those new licensing regimes talked about from the beginning of this year and all the rest of it, it transpires that from that moment, the restriction on rare earths also extended to silver. Why? Because at about that time, America announced that silver was now a critical mineral. Consequently, they looked forward to accumulating silver because it is a critical mineral. It is used in defense purposes and so on and so forth. And of course, they don't really have, so far as we're aware, they don't have any stockpiles of silver. So from China's point of view, is she going to actually turn around and supply this silver to America, having denied her the rare earths? No, it was quite clear that silver had to be included in this as well. This was not made publicly available, but literally within 2 or 3 weeks, we had a sudden crisis in the LBMA when the silver lease rate shot up 40%, I think it was, on the 7th of October last year. And it was at that point that the silver price really took off. We continue into this current year. If you look at what China has been doing with her silver imports, she imported a record 1,628 tons of silver in the beginning of this year. And that is something which has continued. We don't have full import statistics, but we could see that from the UK alone going into Hong Kong, there's a further 367 tons. I mean, this is substantial stuff. Having having turned round from being, if you like, the manager of the price by happily exporting quantities of silver into the global markets, she is now contracting the supply of silver. And this actually also rings a bell in the gold market because she is also continuing to import gold in substantial quantities. But returning to silver, we have this situation where we continue to find that Western capital markets are now being drained, and that is going to have a huge impact on the silver price going down the road. The other thing that we ought to note is that something like 56% of mined silver actually is a byproduct of copper and nickel. Now, copper and nickel are refined out of their ores by using sulfuric acid. We have a problem with sulfuric acid because when the America's war against Iran kicked off and the Straits of Hormuz were closed, that was a major source of global exported sulfuric acid. So now there is a shortage of the most important chemical when it comes to refining the two ores that supply 56% of silver's mine output. This is a situation which looks likely to continue. Now, at the time this was recorded, there was huge, great hope that there would be negotiations to settle the situation and that the blockage of the Straits of Hormuz would be removed and so on and so forth. But we've got to put that to one side because there is a lot of water to flow under that bridge, so to speak, before we can actually say that the supplies of sulfuric acid from the Gulf are returned to anything like normal. Apart from anything else being a downstream product of oil refining, quite a lot of the refining capacity around the Gulf has been damaged in this conflict. So I don't expect sulfuric acid supplies to resume anything like normal for some considerable time from that source. But there is another problem, and that is that China reacted to this sulfuric acid problem by stopping its exports of sulfuric acid. So what you have is a situation where copper supplies around the world and also nickel supplies around the world are impacted very unfavorably by this move. Interestingly, if you look at the price of copper and nickel, they have moved up substantially over the last year into new high ground, both of them. Now, I know that silver, you could say, front ran the situation, but the idea that these base metals power ahead into new high ground at a time when silver is just sort of moving sideways or downwards is actually an anomaly because they should be rising more or less in tandem. So if I can summarize, what we have on the industrial side is we have a growing shortage of silver around the world. And I mean, we're in something like the 7th year of supply deficit, which until this year hadn't really mattered because China was happily exporting huge quantities of her silver, which she would have stockpiled over long periods of time. That has fundamentally changed. Now, we haven't even considered the monetary qualities of silver. Silver traditionally is seen, if you like, as playing second fiddle to gold. But because it's less liquid, silver, if you like, is a lot more volatile than gold. And if you look at the relationship between gold and silver, when gold goes up, silver goes up roughly twice as fast. When gold goes down, silver goes down roughly twice as fast. But it is the cheap way into the destruction of value of fiat currencies. And bear in mind also that silver was far more money, if you like, money without counterparty risk in terms of coinage throughout Asia until relatively recently. I remember going to the Persian Gulf back in the late 60s when I was quite young, and I saw that Maria Theresa Thaler's dollars were being used, if you like, by the Bedouin tribes in the area, and they were also cannibalizing them for jewelry and all the rest of it. But silver was still money in that region. Not only that, but China's last peg, if you like, to a precious metal was silver, which ended, I think, in 1935. So you can see there is a history, there's a greater history of silver being regarded as money, as real money, as opposed to the paper stuff that governments produce throughout Asia. And I would guess that as the price of gold rises, which isn't actually gold rising, but it's a reflection of the falling purchasing power of the paper currencies we price it in, then you will see that silver's attractions as a monetary metal are going to return probably quite quickly, because it's far easier to say buy silver at $100 than buy gold at $5,000. So you can see, yes, this is something that is going to happen. So what we have in summary, and this is something we can expect in the coming months, or maybe, I think probably the coming months rather than the coming years, is we will see a combination of demand cleaning out any liquidity in silver in Western capital markets, which actually is already visible as it goes back into China, and at the same time, growing demand as the dollar goes down and all its attendant G7 fiat currencies go with it, growing demand for monetary purposes. There is so little liquidity in the West to cope with these developments. The result is rather like standing in a shower with a bar of wet soap. You put it in your hand, you squeeze it, it shoots up. That is the potential, I think, for silver at this time. So all in all, silver at the moment looks like a very, very interesting proposition. We're principally interested at McLeod Finance and von Greyerz in the monetary qualities of silver. That has yet to show in the markets. But when it does, it could be a very good and effectively cheap way into gold for those who have not bought gold and suddenly discover to their horror what's really happening to the value of their currencies.